Hello and welcome back to Dukascopy TV. Now, often in the studio we have guests in to talk about currencies and about the trends in the market. Today I'm joined by Jean-Marc Sabet, Director of B-sharpe, to talk me through his predictions. Jean-Marc, thank you very much for joining me today.
Thanks for inviting me, Jennifer.
No problem. So let's firstly look at the euro dollar. Now, the euro actually bounced back yesterday against the dollar. How much is this a result of Germany announcing it would accept a debt mutualization?
Well, I think that any step that Germany would accept an agreement with its counterpart, its European counterparts, can only be viewed positively if you compare what's been going on in the latest stages of the European crisis. If you look just after the statement yesterday, a German official said that we cannot expect a supervision agreement of the banking union, neither a detailed deal for the matter. The euro went straight away from 125 down to roughly 124.20. And since we all know now the news that happened overnight, the move has been completely retraced back even to 126.30, if I'm not wrong. Because there is some banking deal that has been happening. DSM, first the FSF and then the ESM, is going to be able to buy sovereign debt in the secondary market. The ESM in a later stage will be able to recapitalize bank also straight away. And all this is positive news, and the market is really risk on at the moment, so every day it kind of changes. The market hates uncertainty, and as long as there is uncertainty, there is a pressure to the risk market. So euro dollar is especially a risk-off market as well, same as the S&P and everything. So as long as there is uncertainty, the euro is going to be under pressure. But for the time being, the pressure has been released with the positive news that have came today.
Yeah, well, let's talk a little bit about the news today. The EU leaders have decided that using the continent's bailout money is a good idea to pump straight into struggling banks. Mm-hmm. How much of this will result in a pressure less on the euro?
Well, as you can see already, the euro went from 124.30, 50 at the close of yesterday to, as I said, 126.30 roughly, and I think we're currently trading around 126. What is extremely important in my point of view is to look at the spread between Germany and Spain, Germany and Italy, and already the pressure starts to go smaller because we are roughly 0.5, 0.6 lower between the interest rate spread between Germany, Italy, Germany and Spain.
Let's look at the dollar Canada now. The dollar actually reached a 3-day high against its counterpart yesterday. How much is this a result of the EU summit, or are there other factors affecting the high of the dollar?
Well, again, the US dollar, just to start with the US dollar, is today much more a measure of risk on, risk off, which means when there is risk on, the dollar is more likely to go down, and in the reverse, it's more likely to go up when there is risk aversion. The EU summit is, for the time being, contrary to expectations, a risk-on result, because the measures looks to be, in my mind, positive, at least in terms of what they decide to do. So dollar Canada, which was very high yesterday, as you said, today is suffering, so as well as all the dollars, if you like. So what is interesting with Canada is that Canada enjoys the sovereignty of its AAA credit rating. So you have a lot of fixed income investors, especially sovereign or Asian sovereign, which are piling assets into the country. But on the other side, in the couple of weeks, you had a big downside in the commodity prices, which also have an impact on the Canadian dollar. And if you look, the commodity currencies like Aussie, Canada, and Kiwi have gone down roughly by 5 to 7%, where the commodity prices have been going down from 12 to 25%. So I think the spread has been quite extended. So now the question will more be, is it going to be more the commodity spread that's going to prevail on the rate, or more the sovereignty and the good credit quality of the Canada. So if the market is going to continue risk on, I expect Canada to reinforce. But I personally, if I look technically, I think that if I have to speak about rates and so on, I would tend to think that between 101.30 to 101.50, the dollar Canada should be a good buy for a target of 105.25, 106 or something like that. But again, this could change very quickly because people are not positioned for risk on. So if risk on is really aggressive and the measure is not only words but really actions, then the risk on could be a big surprise.
I see. Thank you very much for joining me today, Jean-Marc. It's
Thank
been
you.
a pleasure to have you in the studio.
Same here. Thank you.
That's all from us here in Dukascopy Studio, but make sure you click back to the website for more interviews and updates. But for now, goodbye.